All day long, people kept a close eye on the banks in our country after Silicon Valley Bank collapsed on Friday. And today, the government taking over another bank that was getting awful close to that line of failure. All of that had an effect on the markets. The Dow ended up pretty close to where it started, but not before a wild ride throughout the day. And stocks for similar sized banks to the ones that went down, those took a big hit, some down more than 60% from where they closed on Friday. The Silicon Valley Bank collapse is the worst since 2008. And for that and the panic it induces, the president had to come out this morning right away and say something. President Biden trying to reassure us Americans that the banks are safe, and for people and businesses that had money with SVB, that they'll have their money.
Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well.
I mean, say breathe easy, but we're still a little bit nervous. What are we supposed to make of this here at home in Minnesota? On one hand, we're talking about regional banks that primarily cater to tech startups and crypto investors out west. But on the other hand, you don't need to be a banking expert to know what else happened back in 2008. So, Kent, while you are not a fortune teller, you are a reporter, so you went out with those kinds of questions today. What'd you find out?
Well, Janet, there aren't many experts who believe at this point that these bank failures will trigger another financial crisis. This time, the concern surrounds regional banks, especially those, as you mentioned, heavily invested in tech and crypto, and those that hold a lot of government bonds that are sensitive to the Fed's interest rate hikes right now. That is also why the president's words today mattered.
Americans can have confidence that the banking system is safe.
Although confidence certainly isn't high among customers of Silicon Valley Bank or New York-based Signature Bank today, the president's announcement this morning that those customers will have full access to their deposits, including those above the $250,000 FDIC limit, is about preventing an all-out crisis in confidence in other regional banks.
We worry about is when it becomes systemic. When your bank has holdings in another bank, which regional banks often do. So if one goes down, it has an implication. It's not just for you as a depositor, but everybody else.
Paul Voller is a professor of business and law at the University of Minnesota and says that worry was already at play on Wall Street this morning as some investors began betting against other regional banks.
They're probably not going to win the bet because of what President Biden did today.
That's because he says the president and leaders of the Fed and FDIC not only guaranteed all deposits, but also announced a new loan program to safeguard deposits at all financial institutions for the next year.
That's important not just for the banks, but for the small businesses in particular that rely on banks so that they can make payroll.
So let me ask you, how confident are you that this isn't going to lead to a domino effect, essentially?
At least from everything we can tell right now, this is a substantial response that I think should keep this localized.
And he says he's especially confident for those who have money in banks in our region.
We do everything. I mean, we have one of the largest food producers in the world. We have one of the largest diversified manufacturers in the world. We also have the largest health insurance company in the solar system. So this is a diversified economy, and in many ways, a regional bank serving it would also have a diversified base of loans and other types of transactions that you might not see in other parts of the country.
Even though a local crisis in confidence could eventually lead to a wider financial crisis, Paul says he does not believe we'll see a repeat of 2008.
This is one kind of incident that is about the nature of banking, not necessarily a symptom of the broader economy. We're looking at unemployment, which is at record lows. We're looking at capital investment by especially small businesses that is very healthy. So the other kind of underlying trends wouldn't suggest a recession whatsoever, but we have to keep the regulatory house in order.
Now, on that last part, Paul says better banking regulations for these regional banks absolutely needs to be part of the plan moving forward. He says the regulations passed following the financial crisis in 2008 is why the big banks are on better footing right now and why this isn't causing a bigger panic. Jana, he does think those regulations will come, but restoring confidence needs to come first, he said.
Part of what restoring confidence that comes with it, you hear the word accountability. So is there any accountability for these banks did they make any mistakes or were they just playing loose and fast with the rules that were there?
Well, there is that discussion right now about is this or isn't this a bailout? And he said this certainly isn't a bailout for those board members, for these banks, these leaders. They are, as part of this, being fired, according to the president. And that's going to be part of this accountability and regulations moving forward, Jana. And he said that is something that will take some time to get through, to figure out what was done and the decisions that were made, and that will come in the future.
Okay. Thanks so much, Ken. Appreciate it.